Meyer is the chairman and chief economist of LBV Asset Management, and she joins us now. I'm watching the markets as we head into trade. It seems that the S&P has just breached that 7,000 mark. It's quite a milestone. But importantly, Cornelia, we are expecting the Federal Reserve to make a decision today. No real move there, but I'm wondering what you're expecting in terms of messaging and, of course, this big confrontation between Jerome Powell and President Trump, the independence of the Federal Reserve, and how investors are viewing how the president could perhaps change things when it comes to the precedent that has been set for so long.
Well, I think most investors, or really practically all investors, are definitely wanting to see the Federal Reserve, the central bank, independent of government. Because, you need somebody who steers that monetary policy, which is what the Fed is steering, way away from politics. If you want to see what happens if politics intermingles too much with what the central bank does, just look at Turkey. That didn't work out well.
Yes, I mean, there are a lot of examples when you have interference. In terms of President Trump's, very vocal perspective on how he feels on Jerome Powell, as well as Jerome Powell for the first time speaking out about the president, what are you expecting from the Fed when Powell's term ends? Do you believe that the mandate will remain in place?
Well, the mandate, I think, will remain in place. It will be very important who the next Fed governor is. But, it's just the Fed is, there's a governor and then there's a board and all the presidents of the various Feds, Federal Reserves, of Dallas, of all the regions. So in many ways, a Fed governor also has to listen to what his people tell him, or what the board tells him, what the various presidents of the various boards tell him. So in that sense, I expect you will see a tweaking. Obviously, I expect also Powell to calm it down. Central bank governors are not loud people generally. They're generally people who calm things down, and that's what we need. We saw it in the great financial crisis.
Yeah, we've got to calm things down, and you're right. It's the Federal Reserve that's going to sort of bring calm in a storm. The US dollar has hit a 4-year low. And President Trump touted it as a sort of, this is a great thing. He's very happy with where it is. Listen to what he had to say.
I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollar's doing great. I want it to just seek its own level, which is the fair thing to do. You could have it, I could have it go up or go down like a yo-yo.
All right, why does President Trump want a weaker dollar? Does it make exports a lot more attractive? What's your sense?
I think that's it. President Trump is pretty focused, or if not obsessed, with the balance of trade. And obviously, the lower the dollar, the better the export terms for U.S. goods. But then when you look at things in the long run, companies with stronger currencies, their economies tend to fare better in the long run, and it's also a matter of investment. Will you invest in a country where you see the currency, dwindling or being worth less month on month? No. So in terms of investments, inflow of investments, a strong dollar is good. Obviously, in the short run, in terms of export, a weaker dollar will help certain companies.
All right. So I was also looking at Japanese bonds, and frankly, everyone's talking about the 30-year that spiked, and that's created a bit of concern because it's had a domino effect. I want you to take a look at this graph. It's pretty evident that we saw something dramatic happening here. And I'm wondering, and I'm looking at this, is it because of domestic issues in Japan? Is it because we're seeing a mismatch of supply demand within the longer and more mature dated debt? Because it had a spillover effect in the United States. And frankly, everyone has taken notice of what's happening here?
Well, absolutely. And I think, Japan is the most heavily indebted industrial nation or OECD nation. So obviously, the JGB, the Japanese bonds are obviously very much watched. They're an international. They're an important asset class. So if you suddenly see them eroding in terms of value, that sends alarm bells. And the new Japanese, Mr. Takeichi, the new Japanese Prime Minister, is willing to load more debt on top of the debt that there already is, and that did not sit right with investors.
So, Cornelia, we also saw Keir Starmer, the British Prime Minister, in China. While acknowledging the national security concerns, he told reporters that the benefits could not be ignored. The UK is facing economic difficulties and cost of living crisis. How necessary is it for Starmer to continue engaging with China?
Well, it's important for Starmer to have a multi-vectoral approach. China, as the world's second largest economy, is certainly very important there, and there's strong trade links. But don't forget, the UK left the European Union, which was its largest trading partner, and it's now very, very dependent also on the US. So it does make sense. Apart from all the politics that we saw in Davos, it does make sense to have a multi-vectoral approach. And also, let us not forget, between 2010 and about 2016, the UK was very gung-ho on China, maybe too gung-ho on China. David Cameron saw sort of the be-all and end-all of its trade policy in China. So they have become, they've gone the other way, and now they may find the better middle path.
All right, Cornelia, thank you very much for your insights. Good to have you on the show.